Ladies and gentlemen, very exciting news coming out of SoFi today with a potential increase in the total impact of SoFi's loan platform business once again, even bigger than we ever could have imagined. SoFi closes a $700 million securitization of the loan platform business volume. Now, this is a jumble of words that didn't make sense to investors at the start. So if we understand, SoFi's loan platform business is them originating loans for other institutions that don't have the members that we have or the underwriting capabilities to actually underwrite the loans that we already have. Okay. So whenever SoFi goes to originate loans for themselves, they hold it on their balance sheet and then they go eventually, well, they don't have to, but they can eventually sell those to other partners that might want the interest of those loans. But the loan platform business, the loan never actually ends up on our balance sheet. We end up going and underwriting and selling those loans directly to those people before it ever becomes risk for SoFi. But whenever SoFi says that they are now securitizing, which means they're essentially selling loans to an asset manager to chop these up into shares that people can buy almost like a fixed income product. Okay. So if SoFi is selling loans that we don't own, because someone else has originated those loans that we underwritten from our member base, how the heck does this make sense? But essentially, what they're saying here is that SoFi, acting as an investment advisor, is helping use their partner network to sell loans for loans that they have previously signed up for other institutions. This is insane. Okay. So one, it's a $700 million deal out of the $2.1 billion in loans that SoFi had originally signed up in 2024. Potentially, some of this is new loans that we did in 2025 that maybe they're not talking about already, but that's a third of the total volume that SoFi has originated. So think about it this way. All these businesses with capital, like insurance companies, asset managers, or potentially even banks, are not just coming to us for our member base. They're not just coming to us for our underwriting capabilities. They're also coming to us because of the large partner network that we have to sell these loans into capital markets. And we know that because whenever we go back into this thing, it says, okay, the securitization is going to be the first of its kind with SoFi's consumer loan program, right? Where the collateral is being originated in the loan platform business and provides co-contributors with meaningful liquidity to support their ongoing investment in the loan platform business, given the strong market demand for SoFi's personal loans. So they want to go back in to buy more SoFi loans, but they're taking advantage of really great pricing in capital markets so then they can essentially, make right on that spread. And then look what Chris Lapointe, our CFO, had to say. As SoFi's personal loan products resonate with more and more people, we can see continued strong demand for our loans in the capital markets. This offer demonstrates the clear value prop of the loan platform business and our diversified funding strategy. This is the way I see it, because the loan platform business has only been around since Q3 of 2024, at least to the extent where we are actually using our underwriting capabilities and originating that $2.1 billion. SoFi is not just acting as some sort of large bank or tech platform to offer these deals through. They're also acting as an ongoing investment advisor to say, hey, you know what? Potentially you guys can securitize these. There's a really great opportunity in the market right now. You can get a better deal and then come back to us and we'll offer you a better spread on more loans going forward. And then we can continue the cycle all over again. Now, if you're a big SoFi fan, this just sounds like what SoFi's existing business was. Okay, go to our members, create loans, originate loans, and then go and sell them onto capital markets and then re-up and go back to our members for more loans, right? That's exactly what SoFi's business model was before. However, now we're doing it with other people's money. This is fee-based, creating the flywheel effect without our money. This is with other people's capital. Okay, so SoFi is now creating that business model that they want, where they're doing exactly what SoFi's plan is, and they don't need to actually take on the risk. This is exactly the fee-based flywheel effect that SoFi has always wanted to create. Everyone talks about Galileo saying this is where we get our hybrid multiple. No, this is where we get our hybrid multiple. It's much higher margins than Galileo. It's much faster growing than Galileo. And there's just seemingly no stop to this. And it's going to actually propel SoFi's member growth even higher. If they can continue to get all of this new money to just recycle through SoFi, they're going to use a lot of that money to then re-up into sales and marketing so then they can keep up with the high supply of loan volume to satisfy the demand that they're seeing in these loan platform capital deals. I bet a couple things as well, and this is not guaranteed fact, okay? I bet SoFi had taken a fee for setting up this transaction, okay? I don't think that they're doing it for free unless there's some sort of guarantee that that $700 million that they end up securitizing will go back into the loan platform business. It might be something nice that they did in order to just get more funding once again. Or they ended up taking a fee, almost like an investment advisor here, and then also told them when is a good time to actually sell into the capital markets for these insurance companies, asset managers that might not know the space as much as SoFi has, considering that they've done dozens with, tens of billions of dollars worth of deals into these capital markets. Anthony Noto is saying it himself. He's thrilled to see the continued strong demand for SoFi's personal loans and capital markets. Another example of the power of our loan platform business and how true that is, right? We continue to see healthy demand for SoFi's loans and capital markets as our personal loan products resonate with more people. I love the way that they say this because SoFi's personal loans are not necessarily looked at as the same total addressable market as existing personal loans. What you look at as total credit card markets should be the way that people look at total personal loan markets for SoFi, considering the almost instant funding that you end up seeing there. This latest deal provides meaningful liquidity to SoFi's loan platform business partners. Guys, think about it this way. The compounding effects here are ridiculous. SoFi gets better underwriting capabilities the more loans that they end up underwriting, okay? The more that they know, the better that they can get and select better users, okay? Similar to Upstart or the other loan platform businesses that are out there. SoFi then can get paid on a fee-based revenue to bring those people in, and then they could potentially get paid to help them sell those at perfect times and get, an advisory fee or some sort of closing fee for that partner network. And then those customers can come back in to rebuy our loans with our better underwriting capabilities. And then we take that money and go out and get new members to then recycle all of this happening all over again. But then those members that we're bringing in for Loan Platform are then getting financial services products like checking, savings, investing, credit cards, etc. And all of this is happening just based on personal loans. We can now end up servicing loans, which we already do on the loan platform side for personal loans. We can now do that for student loans. So how long until loan platform business opens up for student loans, which is really SoFi's bread and butter, okay? And then whenever we get more satisfied with our ability to underwrite loans on the home loan side, that we do this for other institutions on a safer and yet larger total addressable market type of loan like home loans. This is the craziest new product that SoFi could have ever offered. It just came out of nowhere in Q3 of 2024, and yet it's a bigger opportunity than Galileo and Technisys. I mean, this is absolutely crazy. We're still waiting on that Blue Owl $5 billion deal to close, and potentially it already has, and they just didn't decide to put a press release out. But, hopefully we end up seeing that, and that those people could potentially even securitize those, and then, the whole cycle continues all over again. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. If you guys like these updates, hit the subscribe button down below. Until next time, bye for now.